bipartisan ideas, and is the result, as I mentioned earlier, of a bipartisan effort. It does not, as of yet, of course, enjoy bipartisan support. But we do need to act, and I will act. Every day we delay is a day we are unprepared for what's around the corner, a day when Americans who have lost so much continue to lose confidence in our economic system, a day when we are refusing to confront these very real threats to our economic way of life. And so while I continue to work with my colleagues to build support and make a case for these reforms, I am moving forward today. The stakes are far too high, and the American people have suffered far too greatly for us to fail in this effort. This legislation will not stop the next crisis from coming. No legislation can, of course. But by creating a 21st century regulatory structure for our 21st century economy, we can equip coming generations with the tools to deal with that crisis and to avoid the kind of suffering we have seen in this country over the past number of years. So let me conclude on this note. We will have financial reform adopted this year in the Congress of the United States. And I'll be happy to take your questions.
Senator, with this bill, do you think that abundant bank tax is actually necessary since this could limit?
I don't have it in this bill.
And so do you...
Well, it could be. That's one that will be considered, but not in this legislation.
Senator, only the summaries are available online. I'm just wondering when the full legislation will be available. And
well, it should be now. I think it's gone up. Has it gone up? I'm looking at staff.
Any minute.
Senator,
Any minute.
The banks are going to say this is too much government restricting us and reining in risk, and it's going to make them less competitive with competitors overseas. How would you respond to that?
Well, that's been their complaint. But let me just say, this has been over the last several years. We've learned, obviously, the kind of condition we're in because either we didn't have regulation or the regulators that we had weren't doing their job. This bill is designed to do both. One is to plug in the gaps where regulation didn't exist, and secondly, to see to it that those who are accountable for these responsibilities will do so. Part of the problems has been, and one of the things we do in this bill, is, of course, to provide clarity in the regulatory structure. So there are clear lines of authority. What is the Fed responsible for? What is the OCC responsible for? What is the FDIC responsible for? So there is that clarity. Too often in the past, we had a variety of agencies that could claim some jurisdiction over various pieces of this. So the consolidation, it isn't as much as I offered in November, where I had one single prudential regulator. That's changed, obviously, in this proposal. But it does provide consolidation and a lot more clarity, which I think is an asset for our lending institutions. Should not be seen as a burden, but rather clarity and accountability, which I hope they will receive.
Senator,
the consumer agency,
yeah.
How will that distinguish between small entities such as credit unions and larger ones in terms of whether they will still be regulated on consumer issues by their safety and soundness regulator? How will that deal with that?
Well, first of all, we exclude institutions under $10 billion. The rules would apply, but obviously we're not going to be regulating small entities, mom and pops, not the butcher, not the dry cleaners and so forth that some have suggested with all of this. But clearly we not only want to be able to deal with the mortgages and the brokers and servicers that were at the root of so much of the problems we're facing, but also to get into the non-banks, the larger entities as well, particularly. And we're talking about large entities where these problems occur, and payday lenders and other operators that are big. That's how it's going to work. Now, if you get into, and people have talked about this, safety and soundness, I don't see these kind of conflicts that people are threatening as being large and luminous. But if there is, there's an ability in this legislation to resolve those conflicts. But the idea somehow, we were told that our institutions were safe and sound, and yet what happened, the root cause of our economic crisis was the lack of consumer protection. We all know that today, in fact. It were those subprime mortgages without proper underwriting standards, all the things that various consumer protection divisions within various prudential regulators were supposed to be watching out for and didn't. This bill, as I said, provides that independence by meeting the 4 principles I outlined some time ago. Appointed by the President of the United States, confirmed by the Senate, a separate funding authority, and the ability autonomously to write rules and to enforce those rules. This bill does all of those things.
Senator, you've been very critical of the Federal Reserve. This bill would seem to increase their power and their authority in the economy. How do you...
Well, again, I know there were those, this notion of being punitive or and so forth, the Fed. As I said in the statement here, legislating in anger doesn't seem to me to get you very far. What makes sense, what's responsible? As you recall, we had a debate that went back and forth, and certainly I raised issues about the Fed going back to its core functions. The Fed, of course, and those who felt differently made the case that having supervisory function over our largest, more complex institutions was necessary for them in order to perform their monetary functions. I felt sort of agnostic about that idea, as convinced that that probably made some sense. So initially we had a single prudential regulator, and that changed, obviously, when you had the issue of dual banking be raised and the like, so we began to break that down. And it seemed to be, once we began to move in that direction, that arriving at where we did in this bill made more sense. And therefore, I feel as though we've got a good system in place for those institutions, those bank holding companies that have assets in excess of $50 billion, these large, complex institutions. They will have that jurisdiction over those. They obviously have their other functions that they will perform. For foreign banks with subsidiaries in the United States, they'll have jurisdiction over that as well. So I don't necessarily see it as punishing the Fed, but rather getting back to core functions and having clear lines of authority.
Senator,
Yes.
Senator, you've been trying for months to get Republican support. So far, you haven't even gotten one vote. What gives you any confidence that you'll be able to?
Well, I mentioned in this bill, and I say this to you, and again, there are 11 titles to this bill. And let me just say that I would say on 9 of these titles of the bill, there is agreement or substantial agreement. There are some technical issues I'm sure we'll be debating. 2 of the titles, in the consumer protection area and in the corporate governance area, there's also some agreement, not completely so. I heard Senator Shelby say this morning that we're about 85 or 90% there. That may be a higher number than I would suggest at this moment, but we're well along the path. And so while I don't have standing with me today bipartisan support at this podium, this is the time I'm now introducing this bill. We'll begin the markup next week and move forward. For those of you who've covered the legislative process over the years, you know that at any stage of the development of a bill, you can develop that consensus. Ideally, in some cases, it happens before you write a bill. Sometimes it happens when you actually do write the bill. Sometimes you have to wait for the markup of the bill for it to occur. Sometimes, and not until you get to the floor of the United States Senate. And even sometimes further when you get to a conference committee. This is the first stage of that process. And again, I can't emphasize enough, it's not just platitudes. I'm not just trying to compliment colleagues. This product that you'll be looking at today reflects an awful lot of work that has gone on between Democrats and Republicans on this committee. And it is not, I don't say lightly when I express my gratitude to Senator Shelby, Senator Corker, and again the other senators I've mentioned, Senator Reid, Senator Judd Gregg, as well as Senator Warner, who have worked so hard to get us to this point. So I am optimistic about getting that consensus because of the path we're following.
Senator,
Yes,
are you
sir.
concerned that the possibility of a partisan rancor over reconciliation in health care will affect the chances for a bipartisan bill?
Well, there's always that possibility, but I hope not. Again, these are separate matters. And again, I don't happen to believe that I'm the only guy or my party's the only party in town that cares about these issues. I've heard Senator Dick Shelby talk about consumer protection. Now, we differ on how best to do it. I believe what's going on in the country, the level of unemployment, the loss of homes, the loss of retirement, the loss of health care, the loss of small businesses, all across this nation. This wasn't just about the collapse of financial institutions. We've been focused on that. But there's a job at a small business in rural America that's been suffered or lost because of what's happened in our economy. And I believe all of us have an interest in getting back on our feet again. So I'm, again, confident that on this subject matter, there is a broad consensus that we need to reform the financial system, we need to protect consumers, we need to provide more accountability, more transparency in our lending institutions, in our financial institutions, and I believe we can get there.
Hotel California provision and investment banks, I presume that means Goldman and Morgan can't back out of their bank holding status. They'll forever now be treated under Fed supervision.
That's correct, and I attribute that Hotel California. I know there's a song that the authors deserve credit for it, but Bob Corker deserves credit for including it in the language of this bill.
Can you talk about the Volcker rule? You seem to have a firmer prohibition against proprietary trading than seemed possible a couple of weeks ago.
Well, again, and this is and I support the idea that we need to have some real restrictions on proprietary trading and related activities that occur. But again, I've always felt, those of you who followed the committee over the years, that the banking committee, or Congress for that matter, is not good at writing regulations. And our job here is to set guidelines, which we have regarding the so-called VOCA rule, and then we're charging those responsible for doing so, not if they would report back, but they must report back on how